Welcome to the Homeward Bound podcast by the Mortgage Guys, your ultimate guide to navigating home buying and mortgage lending. Whether you're searching for your first home or settling into your forever home, we're here to make the journey simple, clear, and exciting, helping you secure your dreams one home at a time.
Hello and welcome back to the Homeward Bound podcast. We are the Mortgage Guys, and good to be back with you today. We are kind of a different episode. We're back to the OG, the original gangsters, just the two of us, Kyle Torgerson and myself. We don't have a guest that's going to chime in today. We don't have a third seat today. It's just the two of us talking about some current affairs. And it's been a little bit of a wild ride the last couple of weeks, don't you think?
Yeah, it's been interesting. I was thinking on my way to work today, that Iranian war started about 10 days ago. Mm-hmm. And at that time, just prior to that, I had been in a networking group and was announcing to everybody, hey, everybody, we're sub 6 on interest rates. We're killing it. Everything's great. We're going to have an awesome spring, summer. 2026 is going to be amazing. And then got back to work on Monday. Yeah. If we didn't hear about it over that weekend, but we're deep in the trenches, literally in a war situation.
Yeah. It happened quick. It was one of those situations where, we're going about our business on Friday. I don't think anybody saw this coming. We knew something was hovering out there, but we didn't expect Friday, looking at and how we deal with things. We look at our loans that we have in our pipelines and we sit there and think about, did we lock, should we lock, talk to our borrowers, let's make that decision. This one kind of blindsided us, and it was like, and like you just said, in your BNI group, you just told everybody the rates are low and we're back to these lowest in 3 years and all this stuff we've been hearing. And then all of a sudden bombs drop on Sunday morning, late Saturday night, whatever it was. And our 5.75 rates jumped to like 6.2.
Yeah.
Immediately.
Yeah. I guess a few bombs make a big difference.
It does. And I think part of that too, I think we have to really think about is who we bomb.
Yeah.
I think these geopolitical things really talk about, in where we bombed in Iran, it happens to be one of the most oil-rich parts of our planet. So
it's all about oil, right? There's a couple of things that were going on there that our government definitely understands and knows what's going on as far as behind the scenes there. But, anytime oil is put in the crosshairs, it causes a lot of problems. We've seen a huge rise in oil costs. Mm-hmm. I'm still waiting to catch it at the pump when I go fill my truck up. Mm-hmm. I haven't seen it quite dramatically increase quite yet, but I think there was a report today around $1.20 a barrel gallon or a gas for a barrel.
Yeah.
I was thinking about that. The last time that really hit, that I remember being the first time it hit, was around 2007 or so.
Yeah.
When oil really crept up there really quick, and
mm-hmm.
and man, yeah, our gas was expensive, and of course, 4 or 5 years ago we had expensive gas, and it was like $5 a gallon. I don't think we'll see that.
Yeah,
sure hope not. But
well, it's tough when you start thinking about why is oil so important, and you have to think about it. Oil does and drives everything, and it's not just the obvious, hey, we need to put it in our gas tanks. But that is big. Anything you manufacture, anything you produce has to be delivered. Yeah. And there's cost of that manufacturing, the machinery or whatever it might be that it has to be fueled up. And then the things that we produce, I sit here right here in front of me with this microphone, all these things have oil in the product of what it is. So everything requires oil. It requires a byproduct of oil, gasoline, to be able to fuel things. It is a main driver of everything. So we talk about, and we're going to talk about inflation. Oil is a big part of why inflation is there. And whether it moves up or it moves down has a lot tied to oil.
Yeah, inflation's been a big hot topic for a number of years now, and it's been the main reason for our higher interest rates. They're trying to curb that inflation. We were just talking before this got going, that Fed chair, he's got a tough job. He's been doing a pretty good job in trying to keep interest rates continually down, and then something like this comes along and there's a lot more pressure.
Absolutely.
And those costs of oil per barrel are really going to skyrocket. And so what does that do? That causes the Fed chair to really look at inflation again and say, okay, do we stabilize rates? Mm-hmm. Do we have to increase them again? And where oil flows, really the rates kind of go too.
Yeah, and it's been fun the last, let's just say the last 6 to 12 months, watching interest rates on this improving trend. We've been watching where we've kind of been getting a little bit of a grip on inflation. So because of that, we no longer are having to increase interest rates to be able to, counter inflation, so that we've watched these rates come down, which has been a nice trend. Now here we are with the conflict in the Middle East and, Venezuela here recently, which produces a lot of oil as well. So we get these geopolitical conflicts going on. What we start to see is that disrupts this whole thing. And the big $1 million question to me for us in our industry of mortgages is, have we seen the end of the lowering interest rates? Because people have been hanging on. We've got a lot of buyers that are out there just kind of hanging on, maybe sitting on the fence thinking, I really want those rates in the low fives. I want them to be, 4.9, 5.25, something like that would really feel good to them for whatever reason, for affordability. So my question is, here we are now, just maybe creeping back into the high fives, hopefully pretty quick here. Are we as low as we're going to get? Are we going to see them go back up? What's your thoughts?
I'm surprised that we didn't see a bigger jump in rates. My initial reaction on my way to work the Monday after, or a week ago, I guess, really, is, man, where's our market going to be? And it was an eighth to a quarter worse.
Yeah.
3/8 maybe. Sometimes with some big news, especially worldwide jarring news, rates can jump a point.
Yeah.
And so I'm excited that it wasn't a massive adjustment, big.
Yeah.
And where we're at, 6.2 is not a bad rate. A year ago, we were barely dipping into the sixes. Yeah. So we're still looking good that way. Hopefully we can continue to see some improvement. Hopefully this comes to an end quickly, and doesn't escalate to something different or bigger, I suppose.
Yeah.
But I think rates will calm down a little bit. That initial shock usually makes them jump a little bit unless something drastic happens.
Yeah. And we've always seen in our business the elasticity of things, right? We see markets are reactive. Something happens, markets react, whether it's a report on, the jobs report or some other economic report out there, or a conflict like this. An action creates a reaction, and the market reacts, and it tends to move in a direction that after it makes 1, 2, 3 days of that reaction, there's some elasticity where it tends to pull back, and and that's really where our job is important, to keep an eye on that, to try to take advantage of that bounce back to be able to get that rate locked in for that borrower as good as we can.
Yeah.
So anyway, a lot going on in that economic world, and we're going to talk a little bit about what that does to mortgage rates and why. One thing I was thinking about here, and I maybe just jump right into this, is, the things that really move this thing, and when we get into a conflict like this and we start to see these inflation battles taking place, people turn to bonds.
Yeah.
And bonds have historically been a little bit of a safe haven.
Yeah, anytime there's something that's stressful, all the investors that are buying blue chip stocks or whatever they are, they sell those out. Mm-hmm. They buy treasury bonds or they buy mortgage bonds. Lately, it seems like that's always competing. But the treasury bond has been going up pretty consistently over the last week, ever since this conflict started, which pushes rates up a little bit with it. Mm-hmm. And that correlation with the T-bond is pretty real. And so, any of our listeners that are really trying to figure out what rates are doing real time, pull up that treasury bond, look at it, the 10-year treasury bond. And if that's slipping, if that's starting to degrade or go down, rates are improving. Mm-hmm. But we've seen the opposite for the last little bit. And I've been watching my retirement this last week. I shouldn't have. Never going to retire if things keep going on like this. But I saw a massive adjustment I didn't like to see, but I've got a little more time. Mm-hmm. We'll just keep buying low and during times like this. But don't look at retirement when stocks are not good. But that flow to safety to the treasury bond is real. So.
Yeah, it is. And there's a lot of things that move this when it comes to interest rates. We talked about that on that previous episode where we had, David Dysert and Matt, who was in here with us, and we remoted them in and talked about the things that really move things. But I think what people need to understand is news, good news, bad news in the world, and especially in these conflicts. Right before we started, just now, as we got ready to film, you said, "Hey, the market just adjusted 20 points," and now I'm sitting there looking at it, and it was pretty incredible. And then you looked into what was driving that, and it was basically the president just said that it looks like the war is almost over or something along those lines.
It says it might be shorter than they originally expected. So, yeah, everybody liked that.
Yeah, and with that, the 30-year bond, the yield on it was up. It was up to like 20 positive basis points, and now that's down to 7. So since we've started talking, it's dropped back. So the volatility is pretty real, especially right now in these times of war. So people need to really understand that.
Yeah. I think the one thing that you can't really calculate that doesn't show up on a screen is, when things happen like this and people are a little bit jarred, the prospects of war, that consumer confidence can really weaken and cause people to maybe say, I'm going to stay out of the market for a little bit.
Yeah.
It is still a great time to buy. I mean, historically, the rates are as cheap as they really have been.
Yeah.
And there's a lot of incentives out there. And I know we've got a lot of clients that we're working with. This has been a great start to a year.
Mm-hmm.
And I think 2026 is going to be one of those banner years that people really decide to get into a home, and rightly so.
Yeah.
So
I agree with you. And I saw we see it a lot with different agents and people out there that have a bit of a social media presence, and they'll post something that kind of talks about, interest rates and what they are. And sometimes in our world, since things are so quick to turn and we have our thumb on that thing a lot more than maybe an agent does, a real estate agent, they make the claim that, hey, rates are the lowest they've been in 3 years, or rates are at, and it's always kind of scary. They generalize, which is fine. It's fine. But when they generalize, hey, rates are at 5.75, that's tough, because since they got their information and they made that post, things can change. And then there's some things to be talked about. Things can go up, and sometimes they can even improve beyond what they say. And that's always kind of a little bit of a risky thing for, us to sit there and talk about the real estate world. I would never try to talk about water rights. I'm an idiot when it comes to that. I won't talk about what your value of your home's going to do. Those are not my wheelhouse. So, but anyway, I appreciate them still bringing it up and talking about it.
And I agree. I told you about an experience I had last week where I had a real estate agent saying, what should we offer on this home? I was like, man, you do that part, because I don't know. I know what I know.
Yeah.
And so you make the offers, I'll put the deal together, and we'll get this closed at the best rate possible. But you negotiate the deal. And so, likewise, real estate agents, we're watching this on a daily, multiple times a day.
Mm-hmm.
Let us be that expert.
Mm-hmm.
And, you put the deals together, and we'll look at the market, get things done.
Yeah, one of the things I appreciate that agents are doing is they sit there and talk about, they understand that when rates do come down, because a lot of people on the fence want these rates to get lower. We always hear about it, and they're like, I'm going to buy when rates get lower. I don't know what that target is they're looking for, but agents are doing a good job of explaining to these potential buyers that if you wait too long and then rates do come down, what does that do? And typically what that does is it brings out this influx of buyers, right? You get all this different competition in the market. And then when there's competition, it's a supply-demand driven thing. Now, all of a sudden, they might have an increase in values or sales prices. Mm-hmm. So then all of a sudden, they're going to be competing with a lot more people for that offer. They want their offer to be the accepted offer, but if the number of offers triple,
yeah,
you're going to have a tougher time. So I appreciate how agents put that into perspective when they do post stuff on social media, because they're right. I don't know that part. I just know that, hey, am I qualified? Can you give me a pre-approval letter so I can give it to my agent so they can make the offer? And I hope it gets accepted, because us as lenders, we love to get that phone call or that email that says we're under contract.
Yeah. I think the biggest takeaways for me in this is, is there volatility in the market with war? Absolutely. Is it a rainy day always? Not necessarily.
Yeah.
I mean, we've got some pretty good things happening in our market. And it's funny because one quote from one person can drastically change our market, like we just saw over the last 10 minutes, really. And so we're still locking people, in the 5s. It might be a government loan like an FHA, but I think we'll see that elasticity come back. It's still a great market.
Yeah, it definitely has been. And you talked a little bit earlier before we started talking about why is Iran, obviously it's oil.
Yeah.
But let's talk about geographically what it is. It has a Gulf that sits right next to it. There's a lot of ships in that Gulf.
Yeah, that
right?
Hormuz,
Strait of Hormuz.
Strait of Hormuz is interesting. You know, a geographical feature like that can dictate a bottleneck for our oil industry. And you know, the main tool that the Iranian government has there is they can pinch that a little bit, cause a problem, and you know, then it causes more stress because we got to sort it out.
Yeah.
But yeah, I mean, was it 20% of the oil for the world flows through that strait? So it's an important little piece of geography there.
And since the bombs started dropping, since we did the attack, it's like it's all but just stopped dead, I guess, with all those carriers and all those barrels just sitting and not getting to point A to point B. So with that, obviously, that's why the spike in oil, and which kind of drives a little bit of this inflationary pressure. Yeah.
And once that gets straightened out, I mean, we'll be back to a regular day. Yeah. Regular Monday.
Yeah, I agree. And we talk about elasticity, folks. If anybody is taking any one thing away from this, yes, it did bump our interest rates up a little bit across the board in this industry, but things are elastic, and we will get some improvement. Things will settle down. It's just a matter of when, and I think, like you said, I think we're in for a great year in 26, and hopefully this improvement starts. I would love it if all of a sudden, here we are 2 weeks after, you know, the conflict started, if by week 3, week 4, we're back to where we were prior to the conflict and even better. That would be amazing, and that's kind of the hope.
You know, it's March, and historically the buyer's market really starts between now and June, and so I think you're right. I think we're going to have killer rates. I think we're going to have a lot of excited people that have been waiting to buy a home. Now's the time.
Yeah,
you know, it really is. And sellers are being willing to kick in some incentives, so it's a great time.
Yeah, I'm still seeing a lot with the temporary buy downs and the buy downs. Sellers are willing to make their, and again, here I am trying to talk like an agent. I'll let them do that. But sellers really want to move their product, and they want to do it by offering some incentives, like you said, whether that's a temporary rate buy down, which is where we come in, or if they're just looking to, you know, drop price.
Yeah,
they want theirs to be the attractive one that actually gets put in. But it's interesting. We talk about this, what we've been dealing with here, especially the last couple weeks in this thing since those bombs have dropped. It was a situation where inflation hits and people run to the safe haven of the bond market. And the more people that put money in the bond market, what happens is those yields go down and mortgage rates follow. That's what they do. Mortgage rates follow the yields in the bond market. So more people put money in the bonds as a safe haven, rates go down. And then we've just been dealing with, you know, just a little bit of a challenging time because, you know, even though that part has been trying to improve it, you know, with the investors running to it, when oil prices spike and then all of a sudden inflation happens, the only way to battle inflation is to raise interest rates, which you're talking about the Fed does. So you have this, the money's in bonds, it's going to improve the interest rates. But over here you have oil prices have spiked, so we've got that inflationary pressure, so we have to reduce those rates. So it's this tug of war, this massive tug of war going back and forth, and we're just kind of seeing, reminds me of that one show that was on TV where people are trying to pull the tug of war, and you see that thing in the middle, this team's winning, then this team's winning, and so we're really just trying to wait for this rates to just get in the direction that drops.
Yeah, and I hope all you listeners saw Loescher flex his guns there when he was talking about that tug of war. Like and subscribe if you like those guns.
Yeah.
I'm going to.
That's on that side of the table, folks. This guy's too old, far too old.
No, I think it's great, and I think there's a lot to look at here. You know, we're trying to stay ahead of the market as far as what's relevant to the mortgage and home buying experience. We really hope that those that follow us and listen find some value here. It's important.
Let me ask you a question. When it comes to times like this, you know, you're dealing with a lot of buyers. You're dealing with a lot of people that, you know, have new applications in, some that haven't locked yet. How are you handling that when you have a buyer that asks you, you know, should I lock? I heard this on the news or I saw this on social media, and they ask you as a professional, what do you recommend?
Yeah, then that question about the crystal ball comes out. that came up about an hour ago, actually.
Yeah.
So my reaction to that is, you know, if this rate, more importantly, if this payment fits your budget, It may not be as low as you've seen it in the news or Facebook or whoever you've seen post about it, but does it fit you? Does it fit your budget, and is it okay? Is it something you can deal with? If it is, let's lock it in.
Yeah.
Let's get it done, and don't look back. Make sure that you're comfortable with it, and let's just get you in a home.
Yeah.
Rates are going to improve. They always are up and down, and we're kind of in an interesting flux there. But I really feel like in the next year or so, they're going to be even better. Yeah. There's always things that could change that. Obviously, I mean, we're looking at this. I'm looking back at our ticker here for the mortgage-backed securities, and we've lost like 20 points again, or it's gone up, it's gone down, and so it's a crazy thing. And so, but more importantly, if something feels right, if it's the right payment, don't stress out about the rate. Yeah. Lock it in, get it done, buy your home.
Yeah. They get a little bit emotional about it. And I understand. I mean, everybody wants to be tied to interest rates, but really, you said it perfectly, Kyle. Affordability is king. If that payment works and they can afford it, and it feels good, and it is a good time. You can't even if that rate were to dip between the time that you lock it and the time that they close. If the market improved 0.1%, is it worth waiting and rolling the dice on that, or how about just let's lock this thing and not look back? I like how you said that, because that's really the mindset people need to take. There's so much more to worry about. You got to get the movers.
Yeah.
You got to get out of your old lease that you're going to be in. There's just so many moving parts and pieces that you need to be able to focus on that are causing stress. There's anxiety. I mean, anytime you're in a home buying situation, I mean, there's a little bit of a level of anxiety. Our job is to help reduce some of that. Your agent's trying to do the same thing. Mm-hmm. So just move forward in a way that you can find some peace and safety, and I think the process is just going to be better. Don't get too hung up on the markets and the volatility and everything you're reading on the news or Facebook.
Yeah, I agree.
One thing about the mortgage world, if you don't like the news you've been hearing, just wait a minute, because it takes about a minute for it to change, and it's
like
about
Utah weather.
it's about like Utah weather. It changes about that quick. Well, I know that we've seen a lot of stuff with other people in the industry, whether they're agents, whether they're lenders, or what have you. They've been posting with their interpretation about what's happened since this conflict. And that was really our goal here, is let's roll this out, let's talk about it, and let's talk about why. Why did rates, once the bombs dropped, why did they go up? And in summary, you're dealing with something that we're in an oil-rich part of the world. All those cargo carriers holding those barrels of oil, they got parked. Things were not getting moved around. Gas at the pumps went up. Mortgage rates followed. It's just the way it had to be temporarily, but they will get better.
Yeah.
And we're confident and we're optimistic. Well, with that being said, I think we'll wrap this one up and get with you on the next episode. Thanks for tuning in.